Hello and welcome to 3.0 TV. I am Vishakha Thakur. Digital assets and decentralization continues to drive excitement, even as the crypto market faces turbulence amid rising geopolitical tensions in the Middle East. At the same time, institutional confidence remains strong. Corporates are accumulating Bitcoin. The US Senate recently passed the Stablecoin Genius Act, and under the Trump administration, crypto regulation is picking up speed. So to break down where the industry is headed, I am joined by Christopher Perkins, president of CoinFund, a leading crypto investment firm. So Mr. Christopher brings a rare combination of experience: a former US Marine Corps commanding officer, former head of Derivatives Intermediation at Lehman Brothers, and a managing director at CitiGroup. So today he also advises the Commodity Futures Trading Commission, CFTC, as a member of its Global Markets Advisory Committee. So welcome to 3.0 TV, Mr. Chris.
Thank you, Vishakha. Good to see you.
It's great to see you. It's a pleasure to have you with us today. So, Chris, you have had an extraordinary career arc, from a commanding officer in the United States Marine Corps to leading roles in traditional finance at Lehman Brothers and CitiGroup, and now CFTC advisor and president at investment firm CoinFund. So, what initially drew you towards blockchain and the decentralized finance space?
Thanks for asking. So, I was incredibly excited when I finally learned about blockchain technology, probably around 2014. And I don't think people really grasp how big a deal this is. Essentially, ledgers themselves began 7,000 years ago in Mesopotamia. And if you study history, you know that that's when you saw an explosion of art, science, mathematics, and economics, because once you had a ledger, you could tell who owned what, and it allowed the formation of credit, etc. We saw the second innovation of the ledger during the Renaissance, and we saw the amount of economic activity and forward advancement at that time as well. That underpinned modern accounting. Mm-hmm. And then when I realized with Bitcoin, the blockchain is the third iteration on that ledger. And what makes it so important is you're able to put private property into the internet for the very first time. Well, you couldn't do that before. You couldn't even own your website. And by being able to put private property into the internet and settle it instantaneously, when I was sitting at CitiGroup and I would be waiting for billions of dollars to settle, and I was very uncomfortable because of all the operational complexity, I realized that this could really upgrade the system. It got me incredibly excited. And eventually I couldn't stand it anymore because I wanted to be close to that innovation. And that's what we do at CoinFund. We work very closely with entrepreneurs and help them achieve their goals.
Wow, your journey has been tremendously incredible. And after serving in centralized institutions for most of your career, how do you see Bitcoin or digital assets in today's market from an investment perspective?
I think it's an incredibly exciting asset class. First off, it's not that big yet. It's $3.5 trillion. We also don't have, clear regulation. And the current market environment is very inefficient. It's if you do your own research, and the great thing about crypto is that everything is very public. The data is on chain. And again, I would never offer investment advice, but as an asset class, the amount of innovation and value that we're seeing being created is astronomical. When you couple that with some of the regulatory de-risking that we're seeing, I get even more excited. So let me explain to you, perhaps putting some numbers around it.
Sure.
Today, there are about 30 million developers around the world. And what happened was they were very uncomfortable coming into our space because the lack of regulatory clarity. They didn't want to get in trouble with regulators. They just wanted to develop. Now that we're seeing regulatory de-risking happening in the United States, they're interested in coming in. And what's really exceptional is that we believe there's around 10,000 developers in crypto today. Only 10,000. If I'm off by 10 or 20, you still see it's a very small number. Now we're going to see those developers moving into the space, and the amount of value that's going to be created is going to be astronomical. We're also seeing the same thing on the capital side. Investors are now coming into the space. We've seen, record inflows with the ETF as an example. Sure. And when you bring capital together with entrepreneurs, amazing things are going to happen. So we're very excited about the space.
Wow. But currently, geopolitical tensions such as the Israel-Iran conflict have impacted the market. So what implications do you think these rising geopolitical tensions have on global markets and specifically on digital assets? So basically, where do you see things heading?
Yeah, it's a great question.
Thank you.
Geopolitically, many times because of the age of the crypto asset class, and it's very young. There's only really two tokens that are more than 10 years old. And so as a group, they often behave as like frontier risk assets. So there's turbulence when there's geopolitical stress. Those assets tend, as an asset class, they tend to be volatile, more volatile than traditional assets. Not just generally speaking.
Right.
That volatility works in both directions. What we see today is that yes, there's some interim geopolitical stress. That said, Bitcoin has held steady right around $105,000, which is pretty robust, and we think it forms a good foundation for future breakout. But that said, over the long term, you can expect the assets to behave as they're designed, right? And so, like right now, there's a little bit of confusion in the markets because they're perceived as frontier risk assets. But in time, we expect for that narrative to decouple. And for example, Bitcoin, as it's designed, is really a digital gold, right? And so you would expect over time for it to behave more like gold rather than a risk asset. It's just part of the maturity process. But look, I believe that near-term geopolitical tensions ultimately they'll settle, and then I think it'll set a nice foundation for the next leg up.
All right. So Bitcoin is being seen as a digital gold these days. And now talking about CoinFund, it has a rich history of backing some of the most iconic projects in Web3, such as Dapper Labs, The Graph, Polkadot, and Rarible. So what is the main criteria for selection of these projects?
Right. So we're long-term investors, and we like to invest in early stage founders. And what we do is we're also company builders. Our motto is that we want to champion the leaders of the new internet. And like I said, this is a new and exciting internet. And those entrepreneurs who come in, we like to really stand next to them and partner with them. What do we look for? Well, we are multi-chain in our outlook. We don't look at one chain and say we're only going to invest in this chain. We think many chains are going to exist. It's going to be a multi-chain world. We will look at all different types of verticals, everything from DeFi to centralized finance to gaming. One niche that we found that we think is really exciting is the intersection of AI and crypto. When you bring these two very exciting technologies together, magic really happens when it comes to decentralized compute, inference, training, even like proof of humanity. We did an investment in World as an example many years ago. So we look across the various verticals, and what are we looking for? We're looking for the best founders in the world. People who are mission driven, excited, people that are ready to eat glass and overcome any obstacle to really make sure that their company is successful. So at the end of the day, what we underwrite is we underwrite entrepreneurs, we underwrite people with big ideas, and people who are very driven to succeed.
That's great. And, we have also seen that institutions are buying Bitcoin. We have witnessed significant inflows into spot Bitcoin ETFs, Ethereum ETFs, like you also mentioned. Corporates too are accumulating. So are VC funds, apart from Bitcoin, looking at other altcoin or projects, and where is the money actually flowing?
Yeah, so I think it's very fair to say that Bitcoin has the ETF. You're seeing a lot more mainstream adoption. Ethereum is a very exciting protocol right now. There's a lot of momentum right now in that ecosystem,
Right.
but there's also momentum across many different ecosystems, whether it's Solana, Avalanche, Sui. So we like to look across many different ecosystems, as I mentioned, and we'll look at layer one blockchains. We'll look at applications built on those blockchains, or even centralized folks. And yes, we have a lot of comfort in looking at both equity, private equity, and also tokens. And as we look at various projects, we seek to underwrite and really understand the value associated with those tokens. Tokens are fully programmable, right? You can make them in many different shapes and forms. It's not a one size fit all. And the key to understanding the value of a particular project is really to understand the tech, right? And who builds that tech? It's the people. So if you understand the people, the entrepreneurs, and the technology, and you can actually, and you're conversant in what that code actually does it do what it says? That's how you try to seek value.
Right. So thank you for sharing all the information. And, recently, Genius Act, which lays the groundwork for US stablecoin regulation, it was passed by the Senate and is being in CFTC Global Market Advisory Committee. How do you see this impacting stablecoins in the US?
Oh, this is one of the most exciting parts of my journey thus far. Let's put some numbers around it. The Treasury Department themselves said this was going to result in $2 trillion in Treasury bills being bought. And I think they revised it yesterday and they upped it to like over $3 trillion. Wow, could you imagine that amount of money coming into the crypto ecosystem? Very, very exciting. The United States government is incredibly excited about it because, they create natural consumers for what they're selling, which is their debt, and they love that. Stablecoins give very, very important utility to the ecosystem. They allow you to settle in real time, very efficiently, cheaply, 24/7, borderless payments. That's one application. Another application is collateral usage. You can settle collateral in real time. And for some, particularly in the developing world, they would prefer dollars than the local currency. And so that allows people to hold dollars just with access to the internet. So it's a very exciting time. Now, where do we go from here as those trillions of dollars come on chain via stablecoins? Well, one of the nuances is that the Genius bill is likely going to suppress the payment of interest to the end user. And in the absence of interest, the dollar is a depreciating asset because of inflation. So what we expect to see is people to put those dollars to use to generate that interest back. And how do they do that? Well, they're going to deploy it probably in places like DeFi, where they can generate yield, or find other ways to do so. Or another really exciting vertical after stablecoins is you're going to see things like equities and securities coming on chain. Okay. Maybe they're going to be more interested in buying a money market fund to complement their holdings, or ultimately equities and US stocks. So it's a brand new world. The regulators have gone from very hostile over the last few years to being very, very supportive, encouraging. In my dialogue with them, they are absolutely committed to making the United States, quote, the crypto capital of the planet. And they're very eager to ask for our advice on how to create policies that really make this thing work. So I can't begin to tell you how excited we are about the progress on stablecoins. We expect the law to be signed by the president this summer. And then after that, we'll pivot to market structure, and that will be the next step.
Wow, it's great to hear about such optimism, and in fact, it's great for the entire crypto community. Now coming to the Clarity Act, if passed, would grant the CFTC exclusive jurisdiction over digital commodities. So what market structure changes would this bring, and especially in terms of trading, exchanges, and investor protection?
It is a great question, and I'll just tell you something that's kind of funny, but it's how the law works today in the United States. Everything in the world in the United States, according to United States rules, regulations, and law, everything is a commodity except movie receipts, onions, and securities. Now, it's funny, the Stablecoin Act will probably be a third category. They're saying stablecoins are not commodities. But what we struggled with in the past was that the regulators refused to tell us what was a commodity and what was a security. And there was times when the regulator would say, oh, we think this is a security. And then we go into the courts and the courts say, not so fast, it's not. So the one thing that we're super excited about when it comes to market structure is just clarity. Hey, which bucket is this in? And then the people in crypto, they like to comply. Nobody likes to work outside of the law regulation, but we just need clarity to know how to comply with these things.
True.
Now, the great thing about it is that even in the absence of new laws, once you know if something is a commodity or something is a security, then the regulators are fully empowered to prevent fraud, manipulation, and abuse. And that's a really great start because we don't like fraud. And so once we have that taxonomy, as we call it, then the regulators, I think we would know who's responsible for enforcing those various issues. And then ultimately, as we move forward and provide more regulatory clarity on things like transparencies and disclosures, we'll see how it goes. The Clarity Act market structure is much harder. And I'm also confident that in the absence of the Clarity Act, the regulators in the United States, Brian Quintenz and Paul Atkins, who I both know, they have a great relationship. And I think they'll work together on helping to adjudicate in the interim. So again, really, really excited about what's happening on the regulatory front.
All right. Thank you for sharing all the information. Now, can you share some insights into the current discussions or roundtables which are happening, basically the current projects that are being discussed with CFTC?
There are a number of different projects being discussed with the CFTC. I think one of the most urgent, there's a few things. One is perpetual swaps. Or perpetual futures. And I think that's part of the problem is we're not entirely sure, is it a swap or is it a future? A lot of these products don't neatly fit into, the CFTC was formed in 1974. It's over 51 years old. They don't neatly fit into definitions. And the great thing about the CFTC is they're very principles based. So I think in this new regime under Brian Quintenz, they're going to say, okay, what are we trying to solve for? Okay, we're trying to make sure that customers are protected, their assets are protected, there's good disclosures. I think we're going to find a way to have scalable perpetuals in the United States. Coinbase announced it last week at their State of Crypto Summit that they're going to be launching. Bitnomial has products already. So I think you're going to see scalable perps coming onshore in the United States. It's going to be really good for derivatives markets because today, it's very hard to access derivatives markets if you're a U.S. person, which is hard for you to hedge. And if you can't hedge, you have more volatility. So that's going to be very, very good for markets. I think at the CFTC level as well, prediction markets are very much in vogue. What happens? How should they be regulated? Is it betting? Is it derivatives? I'm really excited to see that play out. Prediction markets, essentially, you bet on an outcome, yes or no.
Right.
And there's famous exchanges like Polymarket or Kalshi.
Side, right?
And so that's another thing that they're looking at.
Great. So on a lighter note, can you share some of the Marine Corp lessons you still apply every day?
Oh, well, I feel like I still get shot at. But in all, joking aside, the Marine Corps teaches you how to operate during and have an understanding of risk management. That's always been part of my journey in finance because there's always risk when you operate in markets, and it allows you to navigate and accomplish your mission despite the risk that's around you. It also allows you it teaches you how to operate in ambiguous environments where, rapidly changing, a lot of data is coming at you and you have to react. When I got my first job at Lehman Brothers, they said, why should we hire you? And I said, well, I was an artillery officer. And I said, well, I make very fast and accurate mathematical calculations and I manage my risk. And if I get my risk wrong, people die. If you get your risk wrong, you lose some money. So don't you see how it's correlated? And they bit and they agreed and they gave me a job. So that's how I think about it.
Wow. So thank you so much for being with us, Mr. Chris, and sharing your insights on where the market is headed and, of course, the regulatory part of it. It was wonderful having you on the show.
Humbled that you asked me to join. Thank you so much.